Right here on ET Now. I'm Mubina Kapasi. With me is Siddharth Bhamri. And Siddharth, of course, today is our auto sector special. It's been a sector quite in news, not only, of course, because of the fact that, we have seen stock prices correct, Maruti, Eicher, etc., but even Trump's entire tariff tantrum. So we are going to address that. We're going to address all of your viewer queries over the next 60 minutes. For now, markets looking weak. We've lost about 0.6% on the Nifty. We're threatening to breach even 10,300. 200 points gone for the Sensex as well. But the broader markets are being able to hold on with some minor gains for the mid-cap as well as the small-cap. Meantime, here are your top headlines at this hour. Jayaprakash Associates, and once again, it's Rakesh Jhunjhunwala's Rare Enterprises that has bought about 3 crore shares in the counter at a price point of 18.37 per share. The stock is rallying on the back of that big entry. And CLSA, meantime, is talking about Tata Motors. They want to maintain a sell stance on that. They're cutting the FY 19-20 EPS by 14 to 19%. They're also cutting the target price to 330 rupees from 395 earlier, as they see JLR's volume growth lagging peers, and there's also rising competition in SUVs. And autos is the flavor of the season. Jefferies, however, on the flip side, has upgraded Mahindra and Mahindra. They've also upped the target price to 860 rupees, as they believe fundamental factors have improved in the recent months. Margins have expanded, and that's why they're optimistic when it comes to M&M. PFC, meantime, had a conference call wherein they expected the government sector NPAs to reduce in FY19 and private sector net NPAs to reduce to 2.2% by next year. Deutsche Bank has a buy on Power Finance Corporation with a target at 140 rupees. Gravita India, meantime, is seeing some very smart gains. This after the company has won an order valued at 300 crore rupees, 2.2% higher for Gravita India. Meantime, OBC shareholders have approved for a share issue to the government at 124.6 rupees per share. That, along with all the other mid-cap PSBs, are rallying in trade. Edelweiss Finance has called off the deal to buy Relegate's security operations. That's what Cogensis and agencies are telling us. Edelweiss Finance says that Relegate could not obtain the necessary clearances, hence the fall through. And we have Goldman Sachs talking about Voltas. They've upgraded the stock to a buy from neutral, target at 640 rupees, as they believe that structural growth in air conditioners could drive growth, and that's something that could continue for a long period of time.
Well, that's top headlines and a lot of news and action in market in today's trading session, which was so not visible when we started on a very somber note. Clearly, Nifty is under pressure. Bank Nifty, if you can see, is absolutely flat. And Mumina, today is the day when you are seeing PSU banks doing really well, but still market is down. We are seeing OMC stock going down. Some of the large cap names like Reliance are under pressure. Apart from Reliance, ITC has a strong weightage or high weightage in Nifty. That stock is down by 1%, clearly taking market along with it. If you look at what's happening in the overall space, that's option space, we are seeing a lot of call writing taking place today, which was not the case in last 2-3 trading sessions. 10,300, 10,400 and 10,500 call options are seeing heightened activity at this point of time in a range of 8,000 contracts to 10,000 contracts, which is pretty okay, not less, not very significant. Let's understand from our experts that how they are approaching this market. And today we have an auto special show, so clearly we are going to discuss more about autos. But let me first welcome Kunal Bothra into the show. Kunal, markets are pretty okay, nothing great happening. We shouldn't have seen this negative take, but it's Reliance and ITC predominantly taking this market down. But you continue with your buy calls, and you are suggesting to buy Quick Heal, M&M, and Mobina was just talking about Jefferies' upgrade on M&M, and NBCC. That stock since last 2-3 trading session has been adding a lot of long positions. What's your take on charts?
Yes, Siddharth, I'm maintaining that long bias because I believe broadly that the index is consolidating, and last few days we've seen the market breadth being slightly better for the mid caps and the tier to large cap names as well. And I believe the focus could probably remain there for at least a couple of days before you see a move on the indices. The first one is a buy and quick heel. I think that yesterday the stock had risen with a very strong set of volumes coming out of a decent enough consolidation. Today, even after this 55-60 points move on the Nifty, the stock is still hovering on the flat side, but the volumes are inching up higher, and I believe that that could be a sign that you might see the stock rising up higher once again. So quickly is a buy from my side. Targets of 340, stop loss at 294. The second is a buy on M&M, and I think on the hourly charts, I think I had flagged this a couple of days back as well, that the stock is forming a bullish flag pattern. The breakout is closer to 740, 741 on spot levels. It's breached as those levels today. So I believe that the stock can rise, some more percentage points from current levels. 780 is the target which I'm eyeing on M&M, recommending a buy with. Stop loss at 735. And the third stock is a buy on NBCC. Yes, the stock has been adding a lot of OI since last couple of days, and on the long side, and even the price is showing some bullish chart patterns. A few days back there was a decent enough rise for NBCC, then a consolidation, and now you're seeing a continuation of up move. I believe these are positive signs for the short-term trend. Suggesting a buy with 222 as a target, stop loss 192.
Thanks, Kunal, for that. Quick heel is interesting. There's a lot of volume action which took place yesterday, big move, and Kunal feel that there can be a follow-up buying as well, which would take that stock further high. M&M is the other buy call apart from NBCC, which went ex-dividend yesterday, and that's the reason it was a bit soft in yesterday's trading session. Let's now welcome Ashwin Patil, research analyst, auto sector from LKP Securities. Ashwin, welcome to ET now. There are a host of questions when it comes to auto space, whether you're preferring four-wheeler or two-wheeler, how CV has done really well. But what we have been discussing today morning is about auto ancillary and how the changing dynamics of this industry because of EVs over a period of time would impact auto ancillary space. Where you see pockets of vulnerability in terms of companies which may get highly impacted because of EVs if they don't do any innovation. Can you throw light on auto ancillary space?
Yeah, sure. First of all, thanks for the warm welcome. I think within the auto ang space, first of all, the EV evolution that is going to happen over the next coming few years, I think that is going to impact certain companies within the auto ang space. First of all, I think the engine makers, the diesel engine makers or the petrol engine makers, the engine makers will be impacted first of all because of conversion of their engines into electric EV engines, and I think that is the companies which are into it, like Bosch is there, then Greaves Cotton is there. These companies which are primarily into making engines for automobiles, they will be impacted. Furthermore, I think the accessories or the other auto anchs which are related with engines, like the radiants, the coolers, the gasket makers for all these this other auto anchs which are related with engines surrounding the engine, they will be getting impacted up to a good extent. I think there are a whole host of companies other than which are not going to get impacted, which will be definitely stealing the limelight than those who will be getting impacted. I think those companies need to be seen with a good target and a good future coming ahead, because they will be definitely ones which the investors can invest into. And a few companies which we have cited which will be getting benefited out of the EV evolution are like companies like which are making batteries, the tire makers, the suspension makers. They will be the companies which will not be impacted. and we should focus on that, I think. First of all, I think Exide Industries looks very attractive at this point in time. The stock has corrected, but it has got a lot of value. GST has actually benefited it, and going forward, even the services they have improved, and the competition which they are getting from the players like Amara Raja, the company is very well poised to take price cuts and reduce the differential of price gap between them, and pose a good, attractive kind of equally good qualitative batteries to the customers. So I think Exide is one stock that we need to look at. Second is Apollo Tyres. Apollo Tyres is within the tire space, it is getting benefited out of again, it is EV agnostic, so it is getting benefited out of the new capacities that it is coming up with in both in the domestic as well as the export markets. Third is Jamna Auto, that we like within the suspension space, and that is a market leader in the domestic markets, as well as it's a number 2 or number 3 player in the global space as well, and it has got great client base, which is more of on the commercial vehicle side, and we know that the commercial vehicle cycle is on an up move, so this stock is going to get benefited to the maximum. And there are the macros are also improving for the commercial vehicle cycle to get benefited. So Jamna Auto is the third stock which we like, and these 3 stocks would be EV agnostic. The stocks which will be impacted because of EV evolution on the negative side, as we said earlier, are the engine.
Okay. Ashwin, you know what? We're going to talk, and we're going to just keep this discussion going for the next 45 odd minutes as well, and we're going to get in your wealth creation as well ideas in just a bit. But yeah, like you said, EV agnostic stocks, that is a key theme that Ashwin is recommending. But of course, for now, it's all about your viewer queries. We have our very first query coming in on our Auto Special show. It's coming in via our Twitter page at AskBNSN, and it's Girish who has sent in his question. Now, he says he has bought 100 shares of Hero MotoCorp at a price point of 3,563 rupees. He wants to know what must he do with a time horizon of 6 months. Just some minor gains is what he's making currently on Hero MotoCorp. Let's understand firstly what exactly the perspective is on Hero Moto. Remember that the Q3 numbers were decent, but again, like every other auto company, this one as well did come under pressure in terms of the margins. But when it comes to electric mobility, like Ashwin has been pointing out, that would be a key theme. He says they are well prepared to enter electric mobility. But let's get in more perspective from Ashwin himself then. Ashwin, how do you see Hero MotoCorp poised? There's all that talk about rural demand and rural revival, and that's one of the key markets, where two-wheelers cater to. So how do you look at Hero Moto?
See, within the two-wheeler industry, Hero and Bajaj are doing really very well. As far as the volumes are concerned, in Feb, Hero posted about 20% growth, and overall also YTD it is posting close to similar kind of growth. I mean, close to about 10 to 12% growth we expect for the full year. And I think the coming season will be of marriage. So April, May will be a marriage season, and also in the rural markets, the company is doing really very well. The rural income or the rural economy, as we all know, is on an up move, and Hero gains about 50 to 55% of its volumes from the rural markets. So definitely this is one stock which we need to look at, and also if we are expecting normal monsoon, then definitely the company gets benefited out of that, as we have seen in the past. So at this point in time, with new launches coming up and the rural demand also steaming up, I think one should be in the stock at this point in time, and 1 year target we are looking at close to 4,000 rupees. So the viewer can definitely be in the stock, and if the stock slightly dips at any point in time, he can definitely buy into it more.
All right, that's Hero MotoCorp. One of the key demand drivers being, the marriage season, etc. That is something that does tend to drive, demand for two-wheelers. Kunal, let's understand your perspective on Hero MotoCorp. It's at 3615. Our viewers making some marginal gains. What should he do?
No, I think he's timed it, pretty well, Mubina. I think in terms of the stock price, largely I think the stock is has been going through a range, kind of a move in last 4-5 months. But this 3400, 3450 seems to be now a very solid and strong base for Hero MotoCorp. So I believe that if the overall texture for auto stocks keep on improving going forward, then I believe you could see a traction coming back into the prices once again. So it's a good price which you've bought into. It's just that the stock is consolidating. So maybe time is what you would need more, in terms of holding on to the stock. I believe if you are a patient investor and have a time horizon of 6 months plus, you could look at even a 3800, 3850 target on Hero MotoCorp.
Well, that's a hold, call coming on from both fundamental as well as technicals. And clearly, Hero MotoCorp is poised for further gains. Technically, 3800 plus levels is what Kunal is suggesting. So hold on to your Hero MotoCorp shares. Our next query is from Pooja Sinha, and she has bought Exide around 228, which is not very far away from current market price, and 300 shares. And she is asking what is to be done, whether she should hold or sell at this point of time. Ashwin, you did mention about the factors, what you like in Exide industry, so we won't discuss factors, but let's discuss valuation. Tell our viewers that what kind of valuation Exide has seen historically and where it is poised now. And we have discussed already that why you are bullish. On valuation parameters, what is so attractive?
See, valuation wise, if we want to discuss, then definitely Exide is perennially trading close to 18 to 20 times PE, and currently also it is close to about 17, 18, the lower range of the valuation band that it has been trading. Hence, we can say that on valuation side also it's quite attractive. And if you look at this we are talking about the core business, and we are adding about 40 to 50 rupees of the Exide life insurance business that it is having. So this comes to a target close to about 300 rupees on Exide from current levels. So I think valuation wise also it looks quite attractive at this point in time.
Valuation wise looking attractive, target price around 300. So from current levels, it's a substantial upside, and even from your buy price, Pooja, which is 228, stock has substantial upside. Coming to technicals, Kunal, yesterday's move was very interesting and closed above some important moving averages.
Yes, Siddharth, but I think on the longer term chart patterns as well, I think this is a very good chart, or a very positive price pattern chart. I think for the last 1.5 years, it's formed pattern of a bullish flag, bullish pennant, and that too on long term time scale charts. That should have bullish implications going forward for Exide. So it's just that the stock is trying to form a base around this 200 mark, trying to go through a time consolidation more at current levels. I believe it's a good buy, a good hold at current levels. Hold on to it. If the stock comes back to say 200, look to average further and bring your cost price lower.
Okay, there you have it. That's Exide Industries for you. The technical as well as a fundamental call. Kunal, at this point, thanks so much for joining us and helping our viewers out. But don't go anywhere. We're going to take a very short break. Ashwin Patil will still be with us, and he'll be giving us his wealth creation ideas. Welcome back. You're watching Buy Now, Sell Now right here on ET Now. And remember, it's our auto sector special. We've had a whole host of brokerages as well chatting about the sector. First up, it's a downgrade on Tata Motors by CLSA, and we're joined by Ajay Sharma to give us why is CLSA believing that even after all this correction, it may still not be able to deliver much going forward. Ajay, over to you.
Well, Mubina, CLSA's downgrade comes at a time when the stock is already down and out and worst performing in the sector. So perhaps CLSA's downgrade is the last downgrade which has come in. But nevertheless, the stock is reacting to that. Almost a day's low right now, over 2% cut. CLSA believes that despite the correction, the time has not come when you start buying Tata Motors, because there is structural weakness setting in as far as the JLR business is concerned. The business is getting competitive. Some of the German car majors are actually planning for launches, almost timing it along with JLR launches. Not only that, they believe that the competitive advantage because of weak product mix will actually will eat into any benefits coming out of their hedging policies. Remember, adverse hedging policies impacted their business quite a lot last couple of quarters, and now it was reversing. But the benefits of reversal in hedging policies will also be eaten away by weak product mix, coupled with, of course, weak volume. Not only that, European demand is expected to be weak as well. So 14 to 19% is the kind of downgrade they've done as far as the earnings goes. and even on the target price, the new target price lies at 330, and the stock is trading under pressure clearly on the negative commentary coming in from CLSA on Tata Motors today.
Thanks, Ajay, for that. And yes, the JLR performance had actually been a bit subdued even in Q3, which came in as a big shocker because that was something that was supporting the quarterly earnings for some time for Tata Motors. But while CLSA has downgraded Tata Motors, we have Jefferies that has actually upgraded M&M. Now, their reasons, of course, for this upgrade to a buy are that the fundamental factors for the company have actually improved quite a bit in the recent past, especially if you look at the two key segments, that M&M does operate in, that's tractor as well as LCV, where Jefferies says that the cycles for both these segments have actually been stronger than expected. And more importantly, while most of these auto companies have been seeing margins compressed due to higher input costs, M&M on one side has seen its margins expand by over 100 basis points on a year-to-date basis for the fiscal 2018. Hence, perhaps that's one of the reasons why they're upgrading M&M, and also the value of the listed investments owned by M&M is also appreciating. They've also upped the target price to 860 from 820 rupees. So it's an interesting note by Jefferies. They are upgrading M&M.
Okay, the auto sector, a lot of action over there. Tata Motors downgrade, M&M upgrade, and certainly with stock prices are resembling that. Tata Motors has corrected substantially from higher levels, and Tata Motors DVR has also corrected almost 50% from its peak, suggesting that how much pain has that stock gone. M&M after consolidation has been moving higher, and our technical experts have been insisting to give a buy call. Let's move on with our queries, and Ashwin, before I go to queries, I want to talk about your wealth creation ideas. You did touch upon Jamna Auto, and Ashok Leyland is also a wealth creation idea for you, and interestingly those are the next two queries as well. My question to you is on Ashok Leyland. Do you think that the best of the scenario for CVs is priced in Ashok Leyland, because stock has been a great performer? Why you are still liking Ashok Leyland, and some aspects on valuation? And you just heard my colleague Ajay, he spoke about how CLSA is downgrading Tata Motors. What is your view? What is LKP's in-house view on Tata Motors? Because we have seen substantial, almost to the tune of 45–50% correction from higher levels. There is worst in the price?
Well, first of all, talking about Ashok Leyland is the prime beneficiary of the CV cycle up move that we have been seeing over the past few months, and the stock has also reacted positively to that news, but we think that still there is a lot of steam left in the stock. First of all, let me tell you that the ban on the overloading on trucks, which is happening in UP and Rajasthan, that is definitely going to fuel a lot of demand in the two biggest states in the country. And secondly, if we see that the agricultural production has been good of both the Kharif as well as the Rabi crop, so that will be fueling demand for higher number of volumes from these levels. Thirdly, if there is a scrapping policy which gets implemented by the government, which is quite a great possibility, then Ashok Leyland, Tata Motors both, and all the other CV makers will be getting benefited out of that to a great extent. So all these parameters. Also, I need to mention that Ashok Leyland is not only into commercial vehicle making, but also it supplies commercial vehicles or vehicles to the defense sector, and defense is on an up move, I think. And also they earn a great amount of revenues from their spare part business. So overall, which is a high margin business, I should say. So overall, if you see on the LCV side also, the company is doing good with the new launch of Dost Plus. Then Boss and Guru vehicles are also doing well. So I think there is a lot of steam still left in Ashok Leyland. We have a target close to about 185 rupees on it. And from these levels, I think it's still looking quite attractive. Also on the valuation point of view, it is quite in the trading range which it had been performing into. So Ashok Leyland is one of our top picks within the auto space. Now coming to Tata Motors, yes, Tata Motors is facing a lot of issues in the European as well as the UK markets. The demand is moving down both in US as well as UK. But I think at this point in time, close to about about 350, 340 rupees, the valuations are looking very, very cheap, as well as the domestic markets are doing good. I think the company was in investment phase in Q3 and had done a lot of it in various markets. And going forward, they are coming up with good launches. So I think they should get a good traction out of it. And therefore we think that there are a lot of concerns in it, but the Chinese markets are doing well, the rest of world markets are doing well, and they may be able to somewhat offset the negativity which is coming from US and UK markets. And also the hedging thing is going to benefit them on the margin front. So I think I may not go that harsh on Tata Motors at this point in time. At 340, 350 levels, still we can put a buy on the stock, and with a target close to about 390 to 400 rupees.
Okay. Ashwin, that's what even we were discussing, that at 345 rupees, the valuations for Tata Motors certainly may be looking a little attractive, and maybe the concerns are a little overdone. Ashwin as well says the same for Tata Motors. But let's bring on board more viewer queries then, and we have Sumit, who has sent in a question via Twitter. He wants to know if he must buy Jamna Auto with a time horizon of 3 to 6 months. Ashwin, while we know that this is one of your top wealth creation ideas, you alluded to it earlier as well, but entry point as well is quite important when you want to invest in stocks. So at this juncture, is Jamna Auto a good buy? And also he has a time horizon of only 3 to 6 months. So would you advise him to extend his time horizon, given that you're positive on the stock as well?
Yes, the stock has actually moved a lot, at 80 rupees right now. It has, one may say that it looks expensive, but it is not. Looking at the opportunities it is having at this point in time, because being a supplier to the CV industry, and, it is having a great benefit of it being the market leader, not only in India, but its second position in a globe, on the global scenario as well. As far as the capacities are concerned, they are expanding their capacities because they are seeing a lot of demand coming from the commercial vehicle side. If you look at what they produce leaf springs as well as parabolic springs. Parabolic springs are, about 5 to 10% higher or pricier than the leaf springs, and the demand for, as the demand for more than 37-tonner trucks moves up, I think the demand for parabolic springs is also going to move up, and that is a high margin business. So there is a room for margin expansion, and the company with great return ratios, I think it stands, in a very sweet spot at this point in time also. So one should look at it from a longer perspective, not only 3 to 6 months. He can extend his time horizon to about 1 year, and for a 1 year point of view, I think definitely 110, 115 should be the target that he should look out for.
Okay, so don't keep a time horizon of 3 to 6 months. Ashwin is saying you should consider extending it because it has potential to reach levels of 110 as well. Manas, 80 rupees is where Jamna Auto is at. Would you recommend a buy? Okay, I don't think we have Manas online with us. We're going to try and connect with him in just a short while from now. We'll do one thing. We'll move on to our next question. It's Kamath Raj who has sent in his question. And it's once again on one of Ashwin's wealth creation idea, Ashok Leyland. Now he says he's holding Ashok Leyland at 1,000 shares of Ashok Leyland at 115 rupees per share. So it's a nice chunky investment he has in the stock, and he wants to know if he must hold or sell. Well, the last couple of months have certainly seen Ashok Leyland rally significantly. He's bought it also at a relatively attractive price of 115 rupees. Ashwin, this is one of your wealth creation ideas, so I'm sure you would recommend him to hold on.
Oh, definitely. He is going to make a lot of money chunk out of it, because his buying is as low as 115 rupees and the stock is now at about 150 rupees, and my target is close to about 185 rupees. So definitely, as I said earlier, all the positives, talking about all the positives, not just reiterating that, I think definitely he can be into the stock and look for more benefits out of it.
so no qualms about it. You purchased it at an attractive price. There's lots more upside left in the stock. So hold on is a clear call from Ashwin. We'll do one thing, we'll slip into a very short break, but don't go anywhere because Ashwin Patan stays on with us and we have lots more viewer queries, so we're going to answer.
Hello and welcome back. This show is Buy Now, Sell Now with me, Siddharth Bhamre, and my co-anchor, Mubina Kabasi. We are, doing special show, and this show is all about auto stocks. Just, before I welcome Manas, we are seeing, market down almost to the lowest point of the day, down by 66, 70 odd points. We are, seeing selling pressure coming not from banking for a change. Most of the private sector banks are flat. Some are positive, some are negative, and public sector banks are doing well, but it is the other end of the market where we are seeing decent amount of selling pressure. Let's also welcome Manas Jaiswal into this show. Manas, you have sell calls, and I'm not surprised. You're selling BPCL. Tata Motors, we discussed fundamentally, is also looking weak to CLSA. Ashwin says that, okay, it's too cheap at this point of time to be very negative on it, but technically you feel that, it can go down further, and UPL is a buy for you, though, it is still struggling to breach that resistance of 730.
Siddharth, in BPCL, because most of the oil marketing companies are looking weak on the charts, and the BPCL we saw some recovery, but it could not sustain above 50-day moving average. Today it has already broken the support of 455, and looking at the charts, I think it can again test its recent low. So I just want to revise my target now. 435 is my target now, and take a short call here and keep the stop loss above 455. Secondly, the sell call on Tata Motors, because here the trend is very clear. It is making lower tops and lower bottoms. It is not sustaining on higher levels, and today again we have seen selling pressure on higher levels. I think stock can even break its recent low, and it can go down and test 335. So here one can create short position with stop loss of 351. And last one is a buy call on UPL, because it is making inverse head and shoulder pattern on the daily chart. Looking at the pattern, I feel that it can break its neckline and it can test its 100-day moving average, which is placed near to 750. So take a long position here and keep the stop loss below 720.
I guess I spoke too soon that Axis Bank and every other bank are flat, but now I'm seeing, selling pressure emerging in Axis Bank, which is down almost to 1%, clearly adding pressure on Bank Nifty. Nifty down by 71 points. Moving on with our auto sector special show, and no auto special show, Mubina, can be complete without question on Maruti, and that stock has done some serious wealth creation for its shareholders over a longer period of time, and I don't know anyone on street who has a sell call or a booking profit call on Maruti, and I'll be surprised if Ashwin has that. So our next caller is Srinivas, the query is from Srinivas Ganpati. He has bought around 120 shares of Maruti, around 8,330, and his query is, should I hold or sell? Well, the answer seems to be quite obvious from most of the participants, but Ashwin, it's at a current price just 400 rupees below the current price. Do you think that the best of share price is behind, or the best of returns which Maruti has made over a period of time is behind us, and now stock can become just like any other decent buy rather than a significant outperformer which was in the past? That as a question from my end, and what should viewer do? He has a buy price of 8,330.
Well, I would say that it's not a screaming buy from this point in time, but it's a decent buy, definitely, at 8,350, because the company is doing well on all the fronts. I mean, on the volume front as well as the new launch of Swift is, it has got an order book of about 60,000 units. Going forward as well, we may think that the FY18 base is high, but it's not like that. In FY19, the company will be catering to these orders and coming up with new launches, and the phase 1 expansion at Gujarat plant as well. So I think at this point in time also it looks quite attractive, and we are seeing margin expansion as well going forward with better product mix. So I think at this point as well, the stock looks quite attractive. One can, if someone has bought at this point in time, then definitely he can hold and look out for a target close to 10,000 rupees.
10,000 rupees target price from current levels, that's a fundamentally buy call. and at 10,000 it would be at all-time high, because its all-time high was around 9,996 if I'm not wrong, and from there was a steep correction, and Ashwin feels that that stock can conquer those levels again. Manas, that's from fundamental perspective. Short term, in last 3 months or so, Maruti has slightly underperformed, which is so unlike what it has done in past. What are you suggesting to this investor who has Maruti with a buy price of around 8,330?
Siddharth, on the daily charts, the stock is making lower tops and lower bottoms. It is facing resistance on high levels. Even on the monthly chart, I am not very much comfortable taking fresh long over here at current levels. So I think it is better idea, because stock has some support near to 8,500. Keep your stop loss below 8,500. If it breaks 8,500, then it can correct more. It can go down and test 8,000 or maybe 8,100. So the last hope is near to 8,500. So that is why I think he should keep the stop loss below 8,500. If it sustains above 8,500 for quite some time, and if it breaks 9,200 or 9,300 in next 1 or 2 weeks time, then definitely you can see some more upside. But till now, 8,500 is a very important support for Maruti. So keep your stop loss below 8,500.
Okay, so those are some levels on the technical side of Maruti that you must watch out for. Let's move on and bring on board our next query. It's Anjali Pinto who has sent in her question on M&M. She says she's bought 50 shares of M&M at 1,382 rupees per share. She wants to know if she must hold or sell. You know, we just, of course, flagged off that brokerage note on M&M, and you know, one of the key positives for companies like these is the turn in the cycle for commercial vehicles. Ashwin, what is your own stance on M&M?
I think M&M is in a, it has seen a very bad performance over the past few years, over 3 to 5 years, and now it's time for it to get a benefit out of the new launches that it is going to do, and its EV readiness that it is showing. It will be coming up with a few EV vehicles also in the next couple of years, and on the SUV side it has lost a lot of market share, but I think going forward with these launches it will be able to gain back up to some extent. Also on the commercial vehicle side, they are doing very well on the LCV side, and I think the management has also recently cited that on the MHCV side they'll break even in coming couple of quarters. So on the FES side, the tractor side, they are doing good, but we need to be cautious about the tractor cycle, because it has been now 2.5 years, and for which the cycle has been on an up move. But now maybe because of the life cycle being of a tractor industry being that much, I think in FY19 we may see some sort of softness in the FES volume growth. So considering these factors, I still go with M&M with a target close to about 825 rupees.
Okay, so they're doing well on CVs with their new launches. They'll be able to gain market share as well. So M&M is a hold according to Ashwin. But on that note, gentlemen, thanks so much for joining us. Manas, to you, and Ashwin, to you as well, for explaining to our viewers, breaking down the auto sector, and of course answering all their viewer queries as well. We hope to catch you once again on another auto special right here on Buy Now, Sell Now. Welcome back. You're watching Buy Now, Sell Now right here on ET Now. Markets, meantime, are at the day's low as we speak. 84 points gone for the Nifty. It's all about commodities this morning. We're losing in excess of 1.5% in metals and energy and in the commodities pack in general. But let's talk about what brokerages are saying this morning when it comes to technical calls. Angel Broking has a buy on Tech Mahindra with a stop loss at 602, target at 690 rupees. We also have Motilal Oswal, which has a buy on UPL with a target at 760 rupees. Stop loss that they are placing for UPL is at 715 rupees. This as well was a call flagged off by Manas earlier. And IIFL has a buy on KPIT Tech, target 239, stop loss 227.5.
Well, those are some more trading calls for you, all buy calls, though market is at lowest point of the day. Clearly, we are seeing, lot of selling pressure. Ram Pitre now joins us, moving on from, equity to commodities. Ram, interestingly, you are bearish on gold and bullish on crude oil, and international markets, we are seeing crude oil pretty stable around $65 per barrel when it comes to Brent crude. What are you seeing to give a buy call over there?
Generally, if you see the crude oil, so far the range, we have seen a high of almost 64.25, and it has fallen to 59.95, kind of close to around 60 level. So every $1 resistance I can see in the market, I can see from technically 61, 62, and 63 kind of level, and a strong support area on a daily and weekly chart is coming at around $60. So as long as $60 holds, I think that's around $1 or $2 upside momentum can be seen. And domestically, if you see the rupee movement, it is moving between 64.80 to around 65.10 from last 1 week or so, and it is slightly weak, close to around 64.80, 82 kind of a level. That's bounced back to around 65, 65 plus. So both the things, it is matching because 64.8 is a strong support area for crude oil and for a rupee, and crude oil is around 60. So it comes to around that level around 39, 60, 65 kind of a level. We can trade from the long side with a stop loss of 39.40 and a my target around 33,995 at 4,000 level for intraday.
Okay, Ram, thanks so much. Completely out of time on buy and sell now. Thanks for watching. Market Sense up next.